Good afternoon and welcome to the McBride Group's monthly market update. We finished a great year in the stock market with a disappointing December. The Dow Jones Industrial Average dropped over 2,000 points, about 5%, and it was the worst month since April for both the S&P 500 and the NASDAQ. So much for the so-called Santa Claus rally. That said, the blue chip Dow Index gained 12.9% in 2024. The tech-heavy NASDAQ went up 28.6%. The S&P 500 gained more than 23% last year and 24% in 2023. The back-to-back gains of over 20% are the best performance for the S&P since 1997 and 1998. In our opinion, 2024's impressive results were due mainly to 5 factors. Inflation continued trending down, which led the Federal Reserve to cut short-term interest rates. The Street is hoping for more cuts in 2025. Consumer spending, which is 70% of our national GDP, remains strong, as is consumer confidence. The job market is solid, although there are signs it is slowing. Wall Street analysts continue to forecast strong earnings growth, especially for tech companies. One way or another, stock prices follow earnings, and the presidential election results are viewed as favorable by the Street. There are always signs of potential trouble. For example, if inflation reemerges and the Fed delays future rate cuts, the market will react negatively. The yield on the 10-year U.S. Treasury note rose by over 15% in 2024, indicating expectations of future inflation. It is highly unlikely to see 3 straight years of 20% gains in the stock market. As a rule, things go wrong when everyone is expecting a good year. The stock market gains are way too narrow. The Magnificent Seven accounted for over 50% of the S&P 500's total return last year. This is somewhat like the outperformance of the internet stocks during the dot-com bubble in 1999. Many of us were aware that about 20 stocks were driving the market higher. We made the mistake of thinking the market would broaden in 2000 and the good times would continue. We could not have been more wrong. The NASDAQ collapsed and it took 15 years to recover. The conflicts in Ukraine and the Middle East could easily spin out of control. The good news in the Middle East is Iran has been weakened and its terrorist proxies have been decimated. Unfortunately, Russia continues to punish Ukraine without remorse. Their brutality is relentless and hard to comprehend. We have been accused rightly of wearing rose-colored glasses, always being too optimistic, as we were in 1999. But we believe the economy and the stock market are strong and well positioned for a good 2025. But as a wise man once said, we don't know what we don't know. Thank you for joining us. We hope to see you next month. And as always, we appreciate your questions and comments.